All right, good day everyone, and welcome to my YouTube channel at Illumination Hub NG. So don't forget to subscribe to the YouTube channel and also click on the notification bell so that you can be notified whenever I drop a new video. So this class is just a continuation of our previous class on interlocking accounts. So we're going to look at a question as we can see on my screen here, and we're going to see how we can solve this question. Okay, now the question states that the profit shown in the financial account of Lawal and Sons Limited is 18,592 naira, and for the same period, the cost account showed a profit of 20,496. A comparison of the two accounts, okay, shows or reveal that the following stock valuation. We have raw materials, opening stock, closing stock for cost accounts, financial accounts. We have the finished goods for opening stock, financial account, and cost account. So the dividend notes, the dividends and interest received of 552 naira and a loss of 1,750 naira on the sale of a processing machine was not entered in the cost account. You are required, okay? You are required to record the profit figures. So what we're going to do now is that we're going to reconcile the financial account with the cost account, okay, and see if we are going to resolve the issue, because we know that the cost accountant and the financial accountant have different approaches, okay, in recognizing their profit. And this is could be due to so many factors like income, revenue recognition, okay, as well as stock valuation and others, okay, and others. So you can go back to my previous video, and the link is attached to this video. It's where you can see or listen to the previous videos based on the introductory parts, okay, where I explain some terms, okay, in regards to this particular topic. So let us go into the video now and solve some questions. So let's solve this question, okay? Let's solve this question. So okay, we're told that we're told that we have to reconcile the profits. Okay, so let us just go in there and do some workings. So solution. So we're told that we need to reconcile the profit. So let us just start by saying Lawal and Sons and Sons. Lawal and Sons Limited. Okay. So Lawal and Sons Limited. Okay. And Sons Limited. So let me write that Limited. Okay. Reconciliation. Reconciliation. Reconciliation of financial account profit with cost account profit. So please kindly ensure when you are preparing your account, okay, make it more neat and more professional, okay, because I'm using a tab to just write this on a pen to write it on the screen here. So let us just quickly start with financial accounting profits. So let me find a way to roll this. Okay, so financial account profits. Okay, so another sign. So we have the financial account profits as we can see here. As you can see here, 18,000, 592. Okay. So let us now go ahead and just quickly. So we're gonna do some workings. So let's figures that we have to add these figures. Okay. Then let us deduct. Let's put deduct here. Deduct. Okay. So figures to add and figures to the dot. Okay, so let me just let's scroll this a bit. So figures to the dot. So let's have that there. So our workings, let's put our workings here. Workings. Workings. So note one. So we have the opening stock of raw material. The opening stock of raw material. Now raw material is a cost, okay, to the organization, okay, and this cost um has to undergo through various process of transformation of the material before it becomes a finished goods, okay. So before we can sell that material, we have to first convert it to a finished product before we can now make sale on it. Therefore, it becomes a finished product, okay, as part of our stock, okay. So in this case, we have the opening stock. The opening stock, so let's say opening stock of RM. So we have the FA and we have the CA. Now the opening stock of RM for um, FA is 7259, which shows that this is higher, and that for CA is 6821. 821, okay. So it shows that we have a difference of 6821. That is 438, 438 difference. These are difference. So 438. Now, what we are simply saying is that the cost of opening stock that we recognize in the FA is higher than what we recognize in the CA. Okay, so this means that we have to add back the difference, the increase in the difference in the opening stock of raw material back to the financial accounting profit. Okay, because we have over recognized the opening stock of raw material. So let us add that back. So difference in opening stock, opening stock, stock of RM, opening stock. Okay, so that's how much is that? That is 438. 438. Okay, so we have the closing stock now. The closing stock. So the closing stock number two, note two, closing stock. So the closing stock is FA and CA. Closing stock here is 5128 and 5483. So we have a difference of that should be 438 for the first one. So we have this should be 553 355. Okay, that's 355. Okay, 355. So in this case, the cost of raw material at close, okay, is lower, which means that we have under recognized, okay, uh our we've under recognized the closing stock, meaning that the closing stock of that of cost account, okay, the cost incurred for that cost account is um is lower is lower sorry, for that cost account is higher. It's higher compared to that of the financial account. Okay, let's see that this is it. It's higher than this. So in this case, the stock left of raw material was not fully recognized. Okay, this will have an effect on our profit, thereby reducing profit. Okay, So for us to be able to, bring back the profit to what it should be based on the cost accounting declared the profit, okay, we have to add back the difference in the closing stock to the FA profit because it is lower instead of what it is not higher. Instead of if it is higher, the FA is higher now, it would have deducted. But in this case, it is lower. So the raw material at close is the raw material that we have at the end, okay? So then we have to what? We have to consider the difference of 355. Okay, so let us do that. Difference difference in closing stock of RM. That is 355. 355. Okay. So that's working two. Let's have about working three here. Working three. Working three we have opening stock. Opening stock of raw material. Opening stock of finished goods. Sorry, opening stock of finished goods. Finished goods. Okay. So here we have for FA for CA. So for FA we have 12,905 and for C we have 13,291. Okay. So we have a difference 13,091 minus 12,901. So we have that should be 386. 386. Okay. So what we are saying here is that the opening stock of the finished goods, okay, is lower, okay, compared to the opening stock of the cost account, okay, which means that we have to what we have to deduct the difference from the profit, okay, because it should be an additional cost, okay, it should be in this there's a difference of 1,000 sorry 396 naira between the cost account and the financial account, okay, meaning that we have not recognized the opening stock in full, okay, on this 12,905, okay. So this means that we still have 386 naira as opening stock to recognize in the FA profit. So in this case, we are going to what? We are going to deduct the opening stock difference. I'm going to also try and explain that using some illustration difference in opening stock, stock of finished goods. Okay. So we have 386. 386. So let me check this out. Okay, I'm not true. So let me back that. Let me create more space. So let me just do that. So this is let me just take this off. So I can have more space to be able to work. So okay, so let us just so let's do that back again. So we have deduct. So let's put that down. Deduct. Okay. So we have difference difference in opening stock of finished goods. Okay, so we have 386. 386. Okay, so let us look at the next one. We have closing stock. We have closing stock. So we have the closing stock. So let's look at the closing stock number 4. I think this is not 4. We have closing stock of finished goods. So closing stock of finished goods, we have FA, we have CA. Okay, for the FA we have 11,131. Okay, and we have 11,430. So in this case, we have a lower um, closing stock on the financial account record. Okay, so the difference is, let's check the difference out. The difference is this should be 11,131,1430. This should be 9. This should be 9. 12. Okay, this should be 3 or 2. Okay, 10, 12, 13. That should be 2. So we have 299, 299, 299. Okay, so we're going to add back. Okay, we add back this closing stock difference. Add back difference in closing stock of finished goods. Okay, closing stock of finished goods, of finished goods. That is 299. Okay, 299. Okay, that's 299. So what else again do we have to check out? So we are told that dividend and interest received. So we earned dividend and interest, number 4. So here we have dividend and interest received. So it means that we have recognized the dividend and interest received. We have recognized it in the P&L account. So what do we need to do? We have to also deduct this from the PA profit, so that we can be in tandem with the CA profit. Okay, so these are other income, so we have to deduct it back from the FA profit. So let us order this discount, or sorry, dividend and interest received. So we deduct that. That is 552. 552. Okay, so what else do we have? We have loss. So a loss is a reduction in profit. Okay, so it means that this loss has been what, because from what we have in the question, we disposed of a machine. Okay, and there was a loss on disposal. Okay, of that machine, meaning that it is what it would have affected our profit in the FA. Okay, reducing the profit in the FA, while the CA profit still remain the same. So what do we do now? We have to add back this loss to the FA profit. So loss on disposal, loss on disposal of machine. That is 1,750. So let's add all the figures, and let's see the difference. Okay, 386 plus 552 will give us 8, 13, 938. Okay, so we're taking this off. So let's add this 438. 438 plus 355. So 438. So let me use my calculator. 438 plus 355 plus 299. Okay, plus 1,750. Now give us 2848. 2848. We have 2848. Let's add that together. Plus 18592 plus 185 plus 18592 2 plus 2848 2848 2848. Okay, so that'll give us 21440. So 21440. So let's see if we can get back the cost accounting profit. Let's deduct 938 from that, minus 938. Now 20502. 20. Oh, the answer is correct. 20502. 20502 is what? Profit, cost, account, profit. So let's just go back to the question to see if this is correct. So we have 20502. We have 20496. Okay. So we still have a difference of 6, 6, 6, 6. So where is that 6 coming from? So let's just check the difference in opening stock. 386. So we have 12905, okay, minus 13291. That's 386, yes. That's 386. So let us just check where the error is coming from. Okay, so let's check that. So let's check that. Let's check that. Okay. So let's see how we can, check this error. Okay, we have six. It's a difference of 6. So this could be as a result of. So let us just check this out. 38668, 13938. Okay. 438, 299 is correct. 1750 is also correct. Okay. So we have 438, which is also correct. So we have 938 as a total here. We have 299, 1750, 9, 12, 10. Okay, 1750. So 9. This is 40, 2049. This should be 438. Where do we have the 438? 438, okay. We also have 355, 13, 7, 8, 4, okay. 355, 11430, 11131. That's 299, 10, 12, 13. That is 4. So we have 12905, 13 to 91. It should be 11, 9, 12 is correct. So we have financial accounting profit. Let's check that. 18592. 18592. So cost accounting profits, that's 24. So let us do that. Let's do the calculation again to see where the error is. Okay. So let me use my calculator to check that. 185. Okay. So one thing is that we just need to verify the accuracy of our postings. Okay, so let us add the figures again. Let's add the figure again. Let's add that together. So 438 plus 355 plus 299 plus 1750 2842. Yes, this is where the error is. 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 So what happened was that we wrote 2. I wrote 2 here instead of 8. So this should be 284 when we add up all these figures. So we just have to be very careful with our additions. When you add up all these figures, it should be 2842. So that is the beauty of accounting. You have to be able to verify your figures to show the accuracy. So minus this will give us 20496. 496. So let me delete that. Okay. So this should be 20496. Okay. So 20496. So this 20496 is similar to what we have here. So let us just check that out. Check the balance out. So you can see that the balance, the cost accounting profit is also 20496, showing that we've been able to reconcile these transactions. So this is how to reconcile interlocking accounts, and it can be tricky at times, but just have to understand the concept. Don't need to cram. Understand the concept. What could lead to the difference? So you can check that in my previous video in the link in the comments on this video. So you have to understand all those differences, things that we cause a disagreement between the cost account profit and the financial account profit. So on this note, I'll say thank you very much for your time. And also, please don't forget to subscribe to my YouTube channel, and also click on the notification bell so that you can be notified whenever I drop a new video. So share my videos with your friends and colleagues and help this video to reach more viewers. Thank you very much, and see you in the next video. Bye bye.